Hi, this is Zak Mir with the Bulletin Board Heroes here at Vox Markets for Sunday, the 19th of September. Starting off with Argo Blockchain, where the shares were up 13% on Friday, and a decent week for the shares. Obviously, we had that smear campaign at the beginning of last month, which so far has rather backfired on those who were trying to smear the company. But there you go. Current position here is that while we're above 150, which was the initial September resistance, we're looking for as high as £2 perhaps by the end of next month. We also got the 50 and 200-day moving averages rising quite nicely, and that means that we are actually in the run-up to a golden cross. The run-up to a golden cross is traditionally the strongest part of the cycle. And just to add to the bullish look here, we also had a gap higher at in the third week of last month. That remains unfilled. That was through the 50-day line, another positive trigger for the shares, as was actually Friday's price action, where we opened at the low and closed at the high. So that's all pretty good stuff. So if you're bearish, well, looks like you might have missed out on that one, or might have got that one slightly wrong to date. On to Ark Minerals. Here we've got a situation where stock has been bumping along the bottom. There was a trend line break, I suppose, there at the end of August. You could say that the trend line maybe runs up to in that way, so slightly adjusted, but nevertheless, falling wedge situation. We've broken that falling wedge at 3.3 pence on Friday. Above that, we're looking for a little bit of a rally, hopefully, and that would be up towards the 200-day moving average area, and through that gap that we had gap down in July, so above 3.3, looking for 5 pence plus, maybe 5.25 pence as soon as the end of next month. If you're cautious of the shares, maybe you'd wait for a clearance of the 50-day moving average. That's running around the 3.6 pence level at the moment. On to Aminex, and here's signs of life coming through. Here another recent trendline break, but we've actually taken September for things to really get going. We're above the 50-day line there at 0.56 pence, looking for the top of the rising trend channel from March up towards a penny, perhaps as soon as the end of next month. Stock that I don't normally look at just because it's a higher ticket share price is Dianomi. Here we've got a beautiful breakout here, and it's normally the rule that I have that you look for the opening range for a stock, or I suppose a stock or a market even sometimes, but a stock here. Here we had that peak around £3.35, and that was broken comprehensively, I suppose. What was that? At the in the sort of last week of last month, so break of 335, we just sort of shot higher ever since. Current situation is that we're looking, maybe trying to guess exactly where the stock was going to go. This stage with little data, it's rather difficult, but the suggestion here is that something along the lines of the parallel trend channel I'm drawing, so perhaps up towards the £5.50 level, while we hold above the £3.80 area, which is a reasonable risk reward. If you want to tighten it up a bit, then maybe up to 410, pointing to 550 plus for Dianomi. Onto a stock which has been requested. We've got Eco Atlantic, which has been a bit of a difficult child over the recent past. I suppose putting the fundamentals aside here, we've got a situation where there's a rising trend channel that you can draw from the beginning of the year. Top of the channel currently heading towards 35 pence, so above 27, looking for 35. If you're an optimist and looking for greater glories, then there is a line there from November heading to 45 pence. So basically, about here, above 27, looking for 35, and then 45 maybe by the end of the year. 35 could be achieved hopefully by the end of next month. Only back below the 200-day moving average, currently at 24 pence, really delaying the upside scenario, but we've had so many tests of that area that would be surprising now if the shares decided to let down the bulls. Moving along to Empyrean, and here it's been a bit of a slow burn as well. We've got a situation where the shares have finally broken up and held above the 50-day moving average. There was a double bull trap through that last month, but above the 50-day line here at 6 pence, we're looking towards the top of the rising trend channel as high as 10 pence by the end of next month. Stop loss back below the recent support for the shares at 5.25 pence on an end of day close basis. On to a stock which I tweeted about on Friday, and seemed to have been quite a good reaction from that. Here we've got broadening triangle here from back in March for global petroleum, and the resistance line target there up to a penny, or 105 even. The reason for the relative excitement here is that we've had nice ricochet, as I said in the tweet, off the 50-day moving average. Beautiful price action on Thursday, opening at the low and closing at the high, and the same on Friday, which is unusual. Initial target here up to the 200-day moving average at 0.7, and then above that, looking for that top of broadening triangle target, which would be very pleasant indeed. On to stock which I've looked at quite a few times in the recent past, Hurricane Energy. One of those head-scratching situations, very volatile and difficult to get those turns in there, but we've got the shares well above the initial September resistance there, 2.9 pence, and above that looking for 5 pence at that late February resistance line projection, hopefully by the end of next month. On to Kavango, and here it's a situation where I suppose the fundamentals have improved quite a lot, but what we like here really is the end of day close that we had on Wednesday above the top of that gap down there from August, so 4.47. It's normally a very reliable signal, gap close signal, so it kind of represents a handbrake turn for the price action, catching the bears off guard and catching the buyers off guard as well, so they're sort of panicking into a situation. Here we've got, if I can get the line drawn properly, a line of resistance there from back in October up to 6 pence as a resistance line projection, and that's valid while we hold above that the top of the gap at 4.5, so above 4.5 looking for 6 pence on Kavango by the end of next month. A stock which I look at periodically, which is there now, is MobilityOne. Here it's good to see the shares bounce after deliver a bear trap bounce so far this month from below the 200-day moving average at 18.5 pence, while we're above that looking for as high as 30 pence, which was old July resistance. You can see the shares broke out of that rising trend channel in July, which was obviously rather disappointing. And here we've got a situation where I suppose it's now a channel like that we're looking at, but the key here really is the break back above the 200-day line, looking for 30 pence, and obviously they're on a longer play, much higher than that, but let's just go for 30 pence at the moment on MobilityOne. Another stock which has come back from being a rather disappointing feature is MediaZest, so looking much better here. Gap through that resistance line there from April, end of March actually, and above that level around 5.1 pence. Looking for rather 0.06 pence, and above 0.65 pence we're looking for as high as 0.12 over the next few weeks, so maybe by the end of next month, and clearly the highs of the year at 0.16 in focus as well soon after that, given the gap through that line of resistance. Stock which is slightly more esoteric perhaps is Microlise. Here you can see that shares have gapped up through or within that rising trend channel that I've drawn previously from July. So currently we're looking for as high as £3 here, while we hold above recent support around, while we hold above that gap higher at 207. So above 207, looking for £3 perhaps as soon as the end of next month. Just a couple of stocks to go now. First one is Safestay, and here we're looking at a situation where the shares have delivered an island reversal, so gapping down there at the beginning or the beginning of August, and then gapping higher over the last week. That suggests that we should at least hit 22 pence over the next few weeks, especially while we're above the recent support and the floor of that channel at 19 pence. Finishing off with Valerix, which was another stock I tweeted about at the end of the week, and here we can see that if I could type in the right stock, here we can see that the shares have broken a trend line there quite comprehensively from January, so that was around 25 pence, 24.5, and above that looking for 40 pence, which is a February resistance line projection at the top of that post-February triangle. So looking pretty good on Valerix while we hold above the 25 pence area. That's it for me today. More updates tomorrow.